Hey guys, Lancer here. Hope everyone's doing well. Thanks for joining me. We'll look into some more actual market finance. I'm going to try to throw in some MTG related work here, but truthfully, this is for anyone that's paying attention to the overall global markets. And why today is probably one of the most important days of the year. We're hanging on by a thread in a lot of different places around the market. And one of the things I wanted to talk about, and I probably already have talked about this in the past, is the US 10-year bonds. And this is the interest rate that the people around the world are willing to buy US debt at. Now, I want everyone to have a look at this graph. And I want everyone to just kind of have an idea on what this graph is showing and what it's done as far as trends goes. Back in the 50s of the US economy, interest rates were always above the 200 monthly moving average, and they were pretty aggressively above it. During that period of time, prices would still move up, but nowhere near the rate until about 1978. Now, this could be because obviously, was it Reagan? No. One of the presidents, he took them off the gold standard and obviously created a lot of inflation when that was confusing for everyone around. But around about 86, the market crashed, and ever since 86, we never went above the 200 monthly moving average for the US 10-year bonds. Now, in the last couple of weeks, and this is not a trend, it hasn't created a trend yet, but it's just something I'm looking at. We have broken and retested and kept moving up for the US 10-year interest for their bonds. And there's a pretty high chance, while this is pretty overbought right now, that any pullback is short term and will continue to move higher unless central banks around the world are quite restrictive for their policies. And right now, they're still not restrictive enough. So there is a chance that we might have some more movement for the US 10-year bond. And remember, when this goes up, that means bank deposits pay more. That means safe assets will pay more yield than buying a house and renting it out. Unless rent prices go up way more than people are actually willing to pay as far as wages goes, they're not going to be able to keep the yield up, and you can actually make more money having savings in the bank. People that have money in the bank will not get punished as long as the government yield is above the monthly moving average, just because you're now going to get a better return than any other time in the last, oh boy, good point. Any other time since 2010 would have been the last time that we would have seen returns like this from a bank holding. This is US, but even in Australia, that's the same thing. This is probably the best time to safely get a yield of 4.55% from your bank rather than buying a house and getting less than 4% while also having to deal with tenants, etc., etc. And if house prices don't move up, then you're literally not getting any value out of it at all. Interesting things to think about. Now, another thing I wanted to talk about was Hasbro stock. I've actually sold out of my Hasbro stock position. Now, why have I done that? Actually, no, wait, did I sell it? Yeah, so I've sold out, I think, about 80% of whatever I bought into Hasbro. It went up by about 10%, and I'm happy with that. Everything else that I'm playing with is literally just on the house, and I'm not too worried about it. It wasn't even that large of amount in the first place, but it's just a short-term bounce that I was playing, and it got to the price point that I expected it to get to. It got to about $61, and now it's stopped under a very important 50-day moving average for the markets, technically. Today is the last day of the month. What did I say, I guess, earlier yesterday was by the last day of the month, if we finish below $61, 61.18, by the looks of it, 61.20, then there's a chance that we have more downside coming. And as far as I can say, there's a dividend payout coming out soon, 31st of Jan, which even then, like, that's crazy to think about people buying into it in response to the dividend. But one of the things that you have to be careful of is when that pays out, usually the stock will pull back at least a little bit. Now, what I'm still thinking is there's nothing that Hasbro has really come out and said that gives me much confidence. This short-term bounce made sense because of all of the moving parts about it, as I talked about in yesterday's video. But overall, I would not want to invest in Hasbro at this point when they literally have just done every single thing that I can think of that's incorrect in the long-term picture, and they haven't corrected that stance. So 11% gain off the bat, running off from the double bottom. We'll have to see. I say 1, 2, 3, 4, 5, 6, 7, 8, 9, which means by the end of next week is when I can expect an actual impact. But I'm not going to take any chances. You have to, do what you can, take the profits. And as it comes to for collectibles and dual lands, especially for the revised edition, I'm still okay with that. The price point entry was a bit on the lower side from my point of view, and I still use them for playing my game. So I'm not too worried about that, and I'm just going to hold on to them forever. Like I don't think that's going to be too much of an issue on my side. But when it comes to Hasbro and things like that, where the company CEO can come out and just make a stupid decision, you had to be careful in the long term anyways for any of these kinds of investments, because you never know what they're going to do. So moving over to what the US 10-year is. So it is the US 10-year Treasury note is a debt obligation issued by the United States government with a maturity of 10 years upon initial issuance. A 10-year Treasury note pays interest at a fixed rate once every 6 months and pays the face value to the holder at maturity. The US government partially funds itself by issuing the notes. It's pretty much IOUs. The United States says, hey, can anyone pay for our debt? We're going to pay this much interest. And people are like, yeah, okay, we'll pay for it. But, and the interest rate goes up automatically, assuming it's not being held back by the central banks, by the free market, because the free market is like, no, I'm not touching your, I'm not paying for your roads and police and all that unless you give me a good interest for the next 10 years, because I don't know what you're going to be doing in the next 10 years. So I want good risk payments. And that's why the interest rate goes up. So the reason why the US 10-year right now is going up is because people are just not willing to loan to the government at the really crappy rates of below 2%, below 3% even. So now we're up to almost 3.5%. And, we probably should be sitting around about 4.5%, maybe even 5%. People are getting obviously desperate to get out of risky assets to come to the US bonds. But truthfully, in my mind, unless they get up to 5%, they're still on the low side. Anyway, so this is something that I think everyone can buy. And I think you can put about max 10K into it. Something that you need to look into. It's just stocks and bonds, usual 401k or whatever system that you guys have in the US. For us, it's super. And I think it's just important to remember that there's many, many ways to kind of just keep an eye on what the economy is doing as a whole. And while it's easy to just point out and say, oh, the economy is doing this, the economy is doing that, you got to look at the bigger picture, and you can't really blame too many people. You can blame politicians. You can blame, pumpers and dumpers, but to get as much due diligence done for this kind of stuff so that you understand what the market's actually doing. The market's now moving at a pace where unless you're paying a lot of attention, you're not going to be able to keep track of really what's been happening. I can actually see that on the daily for the US 10-year, there is a chance that we actually have another pullback, which means that the stock market, while it had a really good run yesterday, might actually continue to have another good run today. And if it has a good run today, then Hasbro stock might actually do well as well. But I'm just saying, as an overall, take your own risks, what you can. I saw another video of another person that does YouTube videos online, and he was saying how he lost a lot of money over 2022, and sadly, he's blaming a lot of people, politicians and everyone, and they have things to blame for. But I think one of the things that a lot of people have to learn is when you keep blaming other people, you're just not going to learn from your mistakes. And one of the things is when you feel like you're getting greedy, understand that, take a step back, understand that you are actually getting greedy. And when you feel greedy, you're going to make mistakes. So, it's all about risk management. Anyways, guys, thanks for watching. Thanks for listening. If you like these kinds of videos, like and subscribe, and see you guys next time.